And now currently we're in FinTech 3.0. So FinTech 3.0 is what the media is reporting, but really what we're talking about is not so much technology in finance, this is not new, but more who is doing that. So unregulated firms or that traditional firms that are not banks starting providing financial services and products. The impact of FinTech in the compliance and the reporting industry will be profound. The reason is that as you automate the process, you remove manual input. If you remove manual input, you remove the risk of misreporting, mis-selling, or misrecording information. That means the reporting and your compliance standards tends to be more robust and reliant. So as a result, this is a typical benefit of the application of technology in the compliance space. Automatic reporting removes human error, and therefore it increases overall compliance, but also decreases cost.
I think FinTech will make a huge difference in how financial institutions undertake their reporting obligations. It will make it much more efficient and much more cost efficient as well. It will allow financial institutions to analyze important data in real time. It will also allow them to manage, to predict, and even understand regulatory risk. And at this point, what we're almost talking about is software analyzing laws. Finally, it will allow financial institutions to better monitor internal employee conduct to prevent misconduct and fraud.
I think technology can improve the efficiency of the compliance people by enabling more timely monitoring in a more systematic way to monitoring the suitability, that is the advice the banks are providing to the clients, and also how they've been selling in the proper way.
Goldman Sachs estimates that 80% of global anti-money laundering costs are attributed to headcount. And this is really incredible. And a lot of these headcount can be either replaced or at a minimum empowered by FinTech and technology. KYC is another area of compliance that really technology and FinTech innovations like blockchain will really change the game.
You'd be surprised to know that a lot of the regulatory reporting is still done through regular worksheets, Excel charts. What FinTech will do is it will allow the generation of reports in a much more rapid manner. Second of all, big data and analytics is allowing financial institutions that rely on FinTech products to analyze large swaths of data, but more importantly, make sense of it, something that humans can't do fast or efficiently.
RegTech promises to assist such professionals in monitoring, surveillance, and reporting of regulatory compliance to help prevent the next financial crisis. However, such professionals will need to develop new skills to analyze the data and to be able to assess algorithm parameters for backtesting. Concerns regarding privacy and cybersecurity will also need to be met. With more smart automation, the next generation of compliance and regulatory professionals will then be able to focus their efforts on reinforcing the appropriate culture and behavioral norms of professionalism in the financial industry.
But the FinTech cannot replace the role of the compliance people in making a judgment that whether there is any underlying dangers or uncover a problem that within the selling process.
I think our current regulatory landscape is very impressive in the sense that regulators have taken a very modern approach to regulating FinTech startups. What we're seeing more and more throughout jurisdictions are regulators saying that they recognize the potential of FinTech to be both disruptive and complementary. And to that, what they've done is they've adopted an approach of allowing FinTech startups to grow before they regulate them.